All right. Good morning, everyone, and welcome to the PetroNerds podcast. I have a smile on my face, but I probably shouldn't. And Justin has warned me, my guest here today has warned me that I shouldn't be cussing today, but there is a war in Ukraine, and I have had a lot of curse words in my head. So I'm smiling because it is the PetroNerds podcast, and that is what I do. However, a lot has happened since I've spoken with guests, and I have Justin Kringstad here with me today to discuss a lot of these things, but we are going to front load this podcast a little bit with what's going on in the market and the war that's happening within in Ukraine, provoked by Russia. So it is the PetroNerds podcast. This is episode 41. My guest is Justin Kringstad with the North Dakota Pipeline Authority. He is I've had him. This will be the second time he's been on the podcast, and today is Monday, February 28th, 2022. WTI is 95.15, Brent is 99.90, and natural gas is 4.42. And I will say there has been, yesterday I saw Brent was nearly $104. So we did see some retreat. We saw some heavy increase on Brent with the opening of trade with Asia trade on Sunday afternoon, and then that has kind of come back down a little bit. So I asked Justin if he wanted to jump in and talk about the war with Ukraine, and he said he would chime in on oil prices in the Bakken. So Justin, you're willing to one, thank you for coming on the podcast. Really appreciate it. Good morning.
Yeah, good morning. Thanks for having me back.
Absolutely. Well, there's a lot of interesting stuff going on, I think, in the U.S. public-private rig count space and just the oil and gas plays in general. And actually, with this all this talk about energy prices and everything, a lot of people are asking when is the U.S. going to turn on the taps? And I do think that the Williston Basin and the Bakken are an important piece of that puzzle that I don't think a lot of folks really appreciate. And as you know, we've known each other for years, and I've always absolutely loved the Bakken for a number of different reasons, from the geology to actually, the actual production, and it works great. But I would sort of like to start this and open this with what's going on in the market. So we did have last week, actually last Wednesday, there was a UN Security Council meeting. And during that UN Security Council meeting, it was an emergency meeting at night, about 9 p.m. Mountain time. And Putin decided to make a statement in his country on television and basically say he was doing a special military operation in Ukraine. Of course, that wasn't a special military operation. He said it was basically going to be in the eastern provinces that he had just designated as independent, and it wasn't. It was a full-on attack on all sides of the country, from Belarus, from the east, from Ukraine, from Russia, and then from the south, from Crimea. So full-on attack on Ukraine. This is something I had been, and this is not an "I told you so" moments, but I have been talking to clients about this for weeks. I have to say that the market and people, and actually the folks in Ukraine, everyone, there was an overwhelming sense that this just simply wouldn't happen. But there was, the estimates went from 100,000 troops to 190,000 troops to over 200,000 troops on the borders, and basically this was a full-on attack overnight in the course of one night. Now, since then, there have been areas that have been taken. If you look at the maps on BBC, they do a really good job of showing the areas of Ukraine that have been overtaken by Russia. But there is a very positive sense when you're following what's going on within Ukraine on the optimism within the Ukrainian people. So there's been, they're saying now 500,000 refugees have fled. Largely women and children have. Lots of them have moved into Poland, and these countries are actually more than willing to. Poland has been accepting them graciously. But you have all these women and children fleeing. You have men being asked to stay to fight, and you have locals picking up arms that have never held a gun before, and they are fighting. And then President Zelensky, who was given flack before, he has held his ground, and he stayed in Kiev, and he gets up every morning and he gives his selfie videos, and he basically says, we're not leaving and we're fighting, and they haven't overtaken Kiev. So within Ukraine, it as big as the Russian military is and everything, they haven't been able to take it. Super, super serious issues for the globe in terms of just changing the borders, what Russia's doing. And then what happened over the weekend was very serious because while the U.S. had said they weren't going to act on SWIFT, which is the big banking system where we transact globally on SWIFT transactions, the U.S. said they wouldn't they wouldn't put sanctions on SWIFT. Other countries around the world, including Europe, said they would be open to doing SWIFT. And Putin basically reacted and said he put his nuclear deterrence folks on high alert. And so that got everybody pretty anxious yesterday, which is why oil prices went up on Sunday in Asian trade. And then now the Ukrainian President Zelensky and Russia apparently have agreed to talk, but that has not happened yet. So hopefully, the big hope is that there can be a de-escalation. And there's a lot of question whether, did Russia not think that the people would fight back? Did they misread what was going to happen within Ukraine? Lots and lots of question marks. But the reality for the oil market is it's really serious in terms of, I would say right now, the fact that it's hanging on this $100 level, at least $20 to $25 is strictly geopolitical. And then these questions are, if they hit the SWIFT system, if they hit the central, and most countries basically said they would hit both Putin directly for sanctions, a bunch of oligarchs, as well as the central bank. And so the big issue last night with markets opening was that, and I haven't checked what happened within Russia, but last night Russian central banks decided in reaction to going after their central bank, the Russian central bank decided to raise interest rates 20% to basically combat what they thought would be a fleeing of folks out of the ruble. And the ruble has been tanking. So that's the local currency. So it's been an absolute mess. So that's been taking place. And the real impact is people keep saying, oh, this is 20% of global production. I want to clarify to folks that Russia does not produce 12 million. Russia produces about right now, according to OPEC figures within the last OPEC report, probably 11.5 million barrels per day. I also want to clarify, and I had Tatiana Matrova on my podcast several weeks ago, Russia can easily produce 12 million barrels per day. Now that's not in the context of war and strife and everything and SWIFT sanctions and you name it, sort of not having cash. That's very, very serious. But in terms of what Russia can produce, technically speaking, they're at about 11.5 million barrels per day. We're still roughly 100 million barrel a day market. So that is not 20%. And then they probably export, it's around I would say 3 to 5 million barrels a day of crude oil and probably a couple million barrels a day of product. And we import, a few 100,000 barrels a day of crude oil, product, I think a few 100,000 barrels a day of product and a few 100,000 barrels a day of crude oil from Russia. So probably about 500,000 barrels a day. But in terms of the actual volumes just going off the market, I don't think they're going to go off the market immediately. And if they did, I think that probably, there'd be some disconnections and they'd probably go to China. So all that's very serious. I don't want to downplay that in any regard. And I do want to bring this up, and I'm sure Justin would be happy to chime in on this piece. And that's that, John Kerry is getting a lot of crap. And I'm trying not to cuss because Justin asked me not to. But John Kerry is getting a lot of crap because, so you've probably seen on the media, basically he did this interview with Reuters, and this came out after the actual Russian invasion, but he gave these comments, I think, to Reuters the day before the Russian invasion actually happened. So basically, he's focusing on climate in the context of this war, and it doesn't look good because he's essentially asking Putin. He hopes that Putin will focus on climate change regardless of war, and so that sounds really bad in the context of you have people, fighting for their lives in a real war raging on in Europe in 2022, which is really, really serious. So he gave these remarks with regards to, I think he gave them on February 21st, 2022, and he gave an interview. It was the Special Presidential Envoy for Climate Implementation Plus Global Climate Action in 2022. So he did this, and then he gave an interview with Reuters, and he's talking about climate change and this war and saying basically a war would distract from climate change. No crap, John Kerry. A war would distract from people's efforts on climate change, as it should. And we saw a reaction last night or yesterday, the Chancellor of Germany. I heard comments on CNBC World very, very late last night that Germany had actually been talking about nuclear and coal. And I went ahead and listened to the Chancellor's speech that he gave, which was very moving. And he did talk about needing to lean into a little more green energy so they could remove themselves from Russian exposure. But he also talked specifically about building out natural gas facilities, natural gas storage as quickly as possible. And they also talked about actually meeting their NATO requirements for their military and beefing up military spending. I think they earmarked several billion on military spending immediately. And then they added to that and basically said they've earmarked an additional 2% of GDP every year for military spending. So this is a very serious thing. This is the sort of come to Jesus moment. And this is not something to say, I told you so by the energy folks or anything. This is just a reality check that this is people, I mean, it's an extremely serious moment in history, an extremely serious moment in energy, and John Kerry has no excuse under the sun because he works for the people who basically said that Russia was going to invade at any moment. So talking about climate change and asking Putin to focus on it is absolutely ludicrous, and he should be tarred and feathered as much as possible on media and everywhere, and he should just basically shut up right now. So with that, Justin, thoughts, feelings?
Yeah, so it is the seriousness of the situation globally, and the discussion is complex around energy. You know that, and it's unfortunate that these type of events really bring to the forefront, what we've seen over the last year in Europe with gas, and now we have conflict and everything else wrapping into this, in this discussion about how do citizens of the world meet their needs for energy. And there is no simple answer, and folks are feeling that, they're seeing that now, and the folks like you and I that are in this industry, and we're going to continue to work to make sure people have affordable, reliable energy. And again, it's so unfortunate that things like this have to bring this to the forefront.
Yeah, and outside of energy, I just want to point out that this is not. This is I could care less about who's right and who's wrong, and which energy. I mean, if green tech would solve this problem, I'd be all for it. I mean, in the context of this, I really could give a crap. But I think it is super serious when, and I actually think that, I mean, leadership in the space is really important. So sort of separate from the Russia-Ukraine situation is extremely serious. What the folks in Ukraine are going through is I mean, is real war. If you haven't seen good coverage, I would tell people really look at BBC. They've done a really good job of showing what's going on and teasing out sort of the fake stuff. And Russia, of course, is putting a lot of fake news behind a lot of footage and stuff and saying it's not real. But BBC has done an excellent job of sort of covering it to see what's actually going on. But separate from that, I have been, especially in thinking about talking to you about the Williston Basin and looking at the basins and the plays. I'm been honest in some of my podcasts and really want to make it clear I am extremely disappointed in U.S. E&P leadership by CEOs. So firstly, I think that pre Russia Ukraine situation, even with that, set that aside, we've had prices run up. We have 7.5% inflation, and we've had this hold the line by these public operators on keeping enjoying the profits and giving all that money back to shareholders, and talking about keeping production pretty flattish or increasing incrementally. Truth be told, I think they're increasing it more than they're really letting on. But setting that aside, the emphasis on net zero is just driving me bananas. And just having this leadership in the space of honesty, of honest leaders, that I'm an oil and gas company. I produce oil and gas. I do it well. The world needs it. And this is what my company is and how I'm going to do it well. I'm disgusted that we have public companies that have not, are just have leaned in so much onto onto the greenwashing and onto this push by these investors. And people know that I'm a big fan of EOG from a technical standpoint. They finally said in their last earnings call that I just listened to, I was really disappointed to hear their net zero by 2040 statement. And the reason I say I'm disappointed, it's because that when you say I'm net zero by 2050 or I'm net zero by 2040 or whatever it is, you're basically endorsing the International Energy's climate change plans on the IEA net zero by 2050, which people say, oh, still requires investment. Well, who cares if it still requires investment in oil and gas? They also say in those same reports, which you're all saying you're complying with, is that we should stop investing immediately in oil and gas, which would be devastating. Not only would be devastating to people across the world, but would be devastating to oil and gas production. And we already see these skyrocketing prices. So it doesn't actually make sense, and it is complete pandering, and it just drives me crazy. And drives me more crazy right now is that I think a lot of these CEOs got lucky that their earnings calls were before this invasion, because they would be in a different position, and they should have had their feet held with fire a little bit more, of saying, hey, prices are pretty high. You keep saying that you're waiting for the market to balance and you don't want to add barrels into this oversupplied market, but if you're saying now that the market's flipped and we don't have an oversupplied market, you probably should be adding some barrels back. And I know there's caution, and I mean, I really do appreciate the sincere caution of not wanting to throw barrels back onto the market, but that's not the message, and that's not what U.S. operators are actually saying. And I granted, I think they should be cautious in terms of just turning up the heat and throwing a bunch of barrels on the market, because I think that, we're headlong into a recession and demand is going to falter pretty considerably. But that being said, when you have an energy crisis and a war raging on, it doesn't quite look as good to be saying you're about returning money to the shareholders anymore. I think the tune has to change a little bit. Any thoughts on that?
Yeah, so absolutely, we're looking at an entirely different scenario now, right? You and I have been in this long enough now that we've seen several price events, and it's puzzling to someone like us that has seen the industry that's been so reactive to price historically, right? I mean, the fact that prices are at $95 here today, and in North Dakota that we've got rig counts in the low 30s. That is something. If you would have told me 5 years ago that, hey, oil is going to be $100
Absolutely.
here in a few years, and North Dakota is going to have 33 rigs, I would have laughed in your face, saying that that's ludicrous. That's not how the industry works. But we are seeing a completely different shift, and the Williston Basin's real heavy on the publicly traded companies, roughly an 80-20 mix when you look at production. And so the U.S., the Williston Basin's real sensitive to that, and these approaches that we're seeing.
Yeah, and the Wilson Basin in particular, and I would agree with that, because I think that I think that it's man. So the Wilson Basin is a beautiful cookie, they say Oreo cookie formation. I mean, I don't want to say simple, but it's well known. It is the oldest unconventional oil play we have, that we know of, globally in the system, that we've actually, drilled and developed. So it's well known. And these are aspects that when we think of like Midland and why Midland thrived sort of during 2020 and 2021, it's because it's shallow, it's well known, had a lot of verticals, it was sort of easy to just go at it. And the Wilson, actually, for many reasons, it's not shallow. I mean, we're talking everything in the Bakken, roughly 10,000 feet deep. However, it is extremely well known. So it is one of those things that you take the sort of the risk out of it. You're not drilling a dry hole. But there's all these questions around inventory, which I would like to get in. And I know we've discussed it before. I do think it is. I think it's incorrect, and I think there's a couple of different reasons for that. But I also think that the Wilson competes with it's losing that love, one, because it doesn't have the private, so it has a disproportionate amount of publics. I mean, I was telling Justin before we got onto the call that I had was crashing through earnings calls last night when I was and then watching the news afterward. And Continental Resources is a public company and is running 8 rigs. And they've mentioned that they didn't lean in too hard on the issue, but they have leaned into it. So in their earnings call, yes, they mentioned the Bakken, but it is not the focus by any means. And yet they're leading in the Bakken. So the next highest rig player is Marathon at 3 rigs. So Continental has 8 rigs. This is this is where they're driving their growth and stuff. Yet they're talking in the earnings call about the Powder River, because they bought Samson's assets 2 years ago, and then they bought, and I believe they just bought Chesapeake's assets, in the Powder River. So now they have a decent position in the Powder River Basin, which for me, actually, this would have made sense for a Williston Basin company 5 years ago to really get into the Powder. If you're looking for more access, especially in the Rockies, it's closer. There's more risk within the Powder for sure. It's definitely not the Bakken, but also Continental had just got into the Permian Basin as well. So that is, and that's fascinating, because I mean, the folks who sold that asset, another company that I have a big bone to pick with, but Pioneer Natural Resources sold that asset and Continental Resources bought it. And what's fascinating to me is that when Continental bought it, they were like, "This is great, it's wonderful," and they're explaining to their investors how wonderful this asset is and how they can, it's great value and everything. Of course, they're going to say that, but then of course, when Pioneer sells it, it's not that great, and that's why we sold it. And this is it's really important, I think, for people to realize is that there's 2 sides to every story, and then it's not crap for an asset, although it's probably not the greatest thing since sliced bread either, or wouldn't have been sold. But people have to talk their book, and they have to really promote their story, and I think that's important in this context. But the Wilson sort of loses out here, because even folks like Continental are not really talking heavy about the Bakken, and I actually think, in terms of if you were trying to grow production, and I mean, there's an inventory side here. I mean, Hess. I didn't love Hess's comments, switching gears from Continental, but Hess basically said at $60 oil, They have decades of inventory at 20. Basically, they have 2,100 wells left, they've said right now, which I don't think people like hearing that number because it seems relatively low. And that they have decades of inventory only because they're going to run how many? How
3
many they're
rigs.
running?
Yep.
So they're going to run a few rigs, and they may add a fourth rig. I think they said only if if this works with the numbers with oil prices. But they're going to add basically shy of 100 wells a year, and because if it's 100 wells a year, then of course they have decades of inventory. But 2,100 wells just doesn't seem like a lot. And they're one of the few public companies really talking about the Bakken exclusively, but it's basically the Bakken and Guyana that are their plays. So I mean, it's really from a public standpoint that's what's hurting the Bakken in a lot of regards, is because the public companies that are there and drilling aren't really talking about it or giving it the attention that it sort of needs. So I'm curious as to your thoughts on that, and what is the state's reaction to that, and how the state is sort of responding to the lack of actual talk about what's happening in the Williston Basin.
Yeah, so there's two things to unpack there. You've got the inventory discussion, which I want to dig into, and then we've got the gas
Yeah,
capture
cool.
discussion, which will also tie into the production growth and some of those limitations. But on the inventory, here just in the last week, I just released some new views on inventory in the Bakken. And the Bakken is one thing, again, it's a challenging thing for folks that haven't been watching it for years, that are just coming into it, if they're new to looking at the play, and getting your mind wrapped around how these shale plays developed, I think is crucial to the discussion, right? If you come into looking at these shale basins in the same way you look at your checkbook account, right, where you've got a set number and every dollar you spend is $1 less, right? If they think about it, if every well you drill is one less well forever in the Bakken at certain inventory price levels. The Bakken, what I've shown here in the last 2 years, we've added more $60 wells multiple times over than $60 wells that were drilled in the last 2 years, meaning that technology that has been developed over the last several years in what we'll call the core. I'm not a big fan of that term, but we'll call it the core. That's what most people are familiar with. The core is rapidly expanding in the Bakken. So 2 years ago, the number of if XYZ company would have said we have X number of wells left to drill at $60 oil, that was at a much higher drilling and completion cost world. That was with what we knew about technology and acreage positions 2 years ago. Now with sub $6 million wells, technology moving out, and we're seeing extremely good well performance in areas that we did not have labeled as $60 locations, right? And so very, very rapidly, the industry is moving out and pushing this forward. So the fact that we're adding more $60 inventory than we're pulling out, I think is a message that needs to get out there, that you can't look at this as a static thing, that this is fluid. This is going to continue to evolve over the last 20 years. I mean, and now we're talking decades long on these outward projections. I can't imagine 10 years from now, 20 years from now, when we're having this discussion, what this is going to look like, right? You have to think about it with that evolution in your mind of how these plays.
Well, I mean, it always reminds me of, and I want to dig into this a little bit. So I apologize for interrupting, but I want you to I want to harp in on this because I think it's not a topic that is well understood. I think you're 100% right at this core. I think what I hear, and I want to hone in on this specifically, is because, when I'm speaking with clients, and I've been telling a lot of folks there's something that, in addition to the ESG and the investor pressure and this sort of pandering, which has driven me crazy. And that pandering I was talking about in the beginning, I forgot to really mention, part of that really is that ESG focus, which I just think is heartily misplaced, especially now. But this whole idea that when these public operators, most of the CEOs have a very clear trajectory on oil prices, and that is up. It is going to go north forever. And it's not. Yes, prices can run up. We certainly have geopolitics that could absolutely hold prices up. However, the global economy and the U.S. economy is not going to hold up. It's not going to hold up at these prices. It's frankly, it's not going to hold up even if prices were to come down a bit. I think inflation and everything else is looking pretty painful right now. So that being said, they could just be wrong on that. But something that holds up in that, why do they think prices are going up? It's the shortfall of investment, and it's the IEA says, look at all the charts, say all the demand that's coming up, and they think that there's a lack of, when we talk about private companies. So the question gets into, what about the private operators? And it's like, well, they just don't have the running room. There just isn't enough of that inventory left. There's nothing that good inventory. And since 2014, the discussion, as you mentioned, Justin, about tier 1, tier 2, tier 3, tier 4 acreage and inventory, and no one would ever explain it, right? They would just say, offhand, off the cuff in the earnings call, they would just say, well, that's tier 1, tier 2, etc. inventory. There was no definition attached to it. There was no deep questions. There was no deep dive on it. So one, it wasn't like everyone had a map in front of them and we knew what was tier 1, what was tier 2, etc. And that changed dramatically between 2014 and now. You are drilling wells that you would have said are not, you're drilling wells that you would have said are that's not tier 1, that's not tier 2, and yet they're being drilled. And so I think something that people have to really realize, and this is especially true for the Bakken, is that absolutely people thought that what you knew today is just that would not be drilled 10 years ago. People said you couldn't go lower into the Three Forks, that wasn't going to happen. And I think what's economical and what's viable is really important. And because of the skew in the Bakken, you particularly lose this story even more. But I think EOG mentioned it, not in their last earnings call, but in their call that they had a Goldman Sachs call that they did. And they put that, I think you can listen to it on Seeking Alpha, as I did. And Ezra Jacobs is talking, it's in January, and they're talking about, the inventory, and they're talking about the Eagleford and saying, well, look, the stuff that we're drilling in the Eagleford now is not, these are not monster wells, but they're extremely economic, and I think that's the difference of realizing is that, these aren't 3,000 barrel a day wells, but they've developed this play and they have all the infrastructure. And so the costs have been lowered and they have this acreage. And I think that's where people have to really appreciate assets individually and the geology and these individual plays, which I always, that's how I started this business. And my studying and everything was on individual assets and operators and their behavior. And people we're sort of focused on all this high level stuff with these big public companies, and we're forgetting what's going on the ground level and on the rock. And all you have to do is look at the private companies and see what they're doing and where they're drilling. And when you see where these private companies are drilling across the U.S., where the permits are, they are absolutely not where the publics are at. And that's not because the rock is sucky. It's because they have an opportunity to drill there. Two, they have the actual place, and prices are high enough to where this is working. So we talk about inventory and acreage and how much we have and what's core. Prices matter a lot, and 60 is a pretty great price overall in the U.S. A lot of acreage becomes super viable. That's what a lot of people aren't appreciating, including these CEOs who are all telling the world that we don't have enough acreage in the U.S. A lot of the acreage that they thought was not great became viable at $60 oil. We're now at $95 oil. So let her rip, folks. The private companies are letting it rip, and it's unfortunate that the Bakken doesn't have enough of those private companies to sort of see this come to fruition. And it's also one of those things of, it's kind of like the Powder River. I think when you don't know enough about the plays, disinformation sort of holds, and people just are skeptical, and therefore you don't get a lot of the not just publics, but you don't get a lot of the privates coming up there, both from midstream and upstream side, to sort of talk about it and get excited. So you're just kind of in a pickle. And I think that inventory story of one, this is really good rock. And I mean, not Julie Lefevre, but she's one of them. What's the old report from the 1970s? Basically, that's Lee Price. Yes, that said there were billions of barrels of oil in the Bakken, and we knew this. We knew this in the 70s, and it wasn't until horizontal drilling and hydraulic fracturing and horizontal drilling really started in the 90s, but it wasn't until 2008 that this thing really ripped. So the idea that what we know now is exactly what it is just kind of ridiculous. And I completely agree with Justin. He put out this great report on his website on the inventory of numbers. And maybe we can just jump. Feel free to comment on everything I just said. Would love to get your thoughts on that, and then we can jump into sort of some of those numbers and some of those things that you put out in that report.
Yeah. So no, again, the report, it's a slide deck. Every 2 years now, I've kind of gotten this routine of updating, well performance, acreage positions, and how neighboring wells are performing and what that means from an inventory basis. It's not rocket science. I mean, you know where wells are performing well, and spatially how many other wells are in that area, and you can make some assumptions and some bookends and to come up with hopefully what are some reasonable numbers with what we see today, and with the big emphasis on today, right? And so 2 years ago, this analysis looked very different than it did today. And that's, again, when we look at, again, not only well performance, but then price, right? Again, with producers driving down that cost, right? We're sub 6. You've seen that now in a number of earnings calls. We used to be talking about $8 million wells, $9 million wells. There was a time $10+ million wells wasn't uncommon. And so, again, those are all things you can slide around on that scale where what's economic, what's not economic, and that all comes together for a real positive story. Again, 20 years ago, the Bakken Three Forks, I kind of had a little bit of a joke in one of my presentations that, we had 0 years of inventory left, right? And it just continues to evolve, right? You have to get back to that starting at point 0 and then figure out where we are today and understand that this is not static.
Yeah, and that, I mean, so the sub, I think one of those things of the prices. So one, the play is known. It is 10,000 feet deep, so it's not like you're gonna drill. We were drilling $4 million wells, so that hasn't happened. That's probably not going to happen. I mean, depth has a lot to do with it. This isn't the DJ Basin. This isn't shallow, sort of plays. So that's a component to it. But the fact that you have lowered costs and they've sort of, I think they, hung out at 7 million and they have come lower. The inflation piece, and we'll loop this, I want to come back to the inventory immediately, but what is the North Dakota and the Williston Basin seeing for inflation right now? And I would, overwhelmingly in my gut, I would say you don't, because you don't have the competition, you simply don't see the levels of inflation. You may have to probably work a little harder to actually get rigs and crews and activity and compete maybe on the labor side. But in terms of overall the cost craziness and things that the Permian are seeing, I'm guessing you guys you're not quite seeing that, nor will you. And that could be also a benefit to maybe incentivize some folks to look at the Bakken a little harder.
Yeah, I mean, obviously you've got the base material cost that influences everyone universally. That's a very real, not only on the drilling and completion side, on the midstream side as well. Any type of new projects, we've got significant inflation numbers that are skewing things that, again, we thought we knew a year or two ago. So those are all factors. Workforce is a big factor going forward. That's going to continue to be a challenge. Gas capture, when we think about oil, again, we'll just come back to this $95 world we're at today. If the industry, we've got two forces at work, right? If there was a desire to push production higher and the desire to meet company gas capture targets, right? For years, we talked about the state's requirements of, it's currently at 91% gas capture, or flip that to 9% flaring. You're seeing much, much more aggressive capture rate expectations from a lot of the major publicly traded companies, and the midstream assets in North Dakota, that at least today would really struggle to, if there was a desire, if prices inflated even further, and the company said, look, we want to ramp up production, but we also want to keep our gas capture targets. I don't think you could see much higher growth than what we're thinking here on these low single digits type, at least from a liquid side. Gas, we'll get into this, but we've got a real robust expectations on the gas side and the challenges that's going to bring to the basin.
And that's overall. So, I mean, you bring up a really good point, and I think I have heard a bit of controversy in terms of how much people are buying. Like, I've asked a few folks on that side of are people holding back in the Bakken because of gas capture? And I'm not sure I've got I feel like I have a consensus, and one, that's because there just aren't enough operators sort of running and gunning on that side. So that could be a component to it. So certainly if you are, in the ESG focus, I mean, gas capturing and making sure you are not flaring is a huge component. And I don't rip on that. That's, reducing your flaring and reducing methane emissions are all great. So I'm not saying you should be letting that rip by any means. And that's certain, but that is a component. And in the Williston Basin specifically, I mean, you're seeing an EIA production, North Dakota production is up. So you guys what's the state production is well over 1 million barrels per day. State production as of November, you're 1.2, 1.3 million barrels per day.
1.1 here at year end. So we've had a tough winter. We'll see that reflected in the December, January, even February numbers have been tough.
It's for all of Williston Basin or for
winter.
North Dakota?
I mean, the bulk of it. Montana is still a very small
Yes.
consideration
Okay.
there.
So
Yeah.
over a million barrels a day. The height was well over 1.5 million barrels per day, and has come off and did that in 2014. Did it again in the when you guys shut in wells for the first time, or at least shut in horizontal wells during COVID. So all that. All of that factors, but it's the gas side, and I really emphasize this when I'm talking to a lot of folks, is that we are at the highest gross withdrawals. I mean, we're on record levels. So I get super frustrated, especially when people are talking about this Russia Ukraine stuff of talking about the largest oil and gas producers. And to clarify to listeners, the U.S. is the largest oil producer in the world. We are still today, even with our reductions that we've had, we are almost 11.8 million barrels per day as of November of 2021, and we are at gross withdrawals for gas production. We're at 113 BCF a day, so we're at record highs for gross withdrawals. And when you start looking at that gas, and something I've been showing is looking at just like completions, like stacking up all the gas plays and looking at horizontal well completions. They're a fraction of what they were a couple years ago, and the rig count is obviously has not recovered on the gas side, and gas prices have moved up, but we're producing a crap ton of gas. So one, this is a smaller molecule. It is easy to get out of the ground. This is we obviously know the story of the Marcellus, but we have a massive amount of associated gas, and in the Permian, we're seeing well over 18 BCF a day of associated gas. We're starting to near those concerns about associated gas again. But in every play, as these, I think from the shut-ins, as these plays got older, as you talk about the base production, and hitting the older wells and the bubble point in the wells, and you're just producing a lot of gas. And I think we've talked before offline recently about this massive amount of gas production, especially within the Williston Basin in North Dakota. One, if you weren't even going to drill anything, you're going to have this gas production, and then two, if you're also drilling, and you're going to have this gas production. And if you're drilling, I'm assuming not all good wells with high pressure as well also have this gas production. And that's always was the thing in the Delaware Basin. I mean, you're deep, you're overpressured, you're thermally immature, and you had a lot of gas that comes with it. And so you have to deal with all that, which is great. So you get 3,000 barrels of oil a day in that well, but you have to deal with all the gas that comes with it. And when I'm looking at decline curves across basins, I'm seeing when the oil's up I'm seeing real big bumps on the gas decline curve when I'm looking at the Delaware and I'm looking at other places. So it's just something that I'm not sure people are really thinking about. One, not just Williston Basin, but how much gas there is. And the Williston Basin specifically, I think, is a great example of, you guys are producing a lot of gas. And what is that, are you seeing the same things for the curves? I mean, regardless if you were one, is the gas curve up on the decline side on new wells, and separate from that, gas is just up overall, right?
Yeah, and you'll love this if you have not. I know you and I for years we've dug into type curves and gotten into the weeds on a lot of fun stuff. What is real fascinating, year after year, you could see if you just take your oil curve, take your gas curve, and and it was very rhythmic, right? Every year the wells were getting better. They'd start with a higher month one production. Overall cumes were going up. 2021, the world changed when you look at type curves. So if you start pulling data and you start looking at type curves from the Bakken, they look extremely different in 2021 because of this gas capture consideration. You are seeing the oil curve, instead of having this high month one peak production, it's starting significantly lower. It is fairly a lot more steady. We don't have a lot of 2021 data that's public yet. So what we've got, you're looking at this first 6-month window that is still producing high volumes, but it is not the same type of curve we've looked at in the past. Gas is the same way. When you think about gas capture, if a company wants to hit 97% capture or 98% capture, a big chunk of the gas flaring from a typical Bakken well is in those first several months. And you can't just let her rip because the midstream assets, they're not configured in most cases to handle that month one, month two, month three of the old style of bring it online, let it flow hard. You're now having to modify how those wells are coming online, and it's crystal clear in the data, but the curves look much, much different. And so we're almost going to have to, I've been thinking about this here, how we're going to look at a Bakken curve, right? It used to be, what's the 30-day IP? What's the 60-day IP? I don't think that's going to be a good metric anymore. We might have to look at what's the 6-month cum, right? How does that
Yeah, so
compare to
you're
a
saying
previous
though,
year.
you're saying basically that operators are throttling production back. So,
Correct.
meaning in the very beginning production of those wells, the production's actually being throttled. And I was looking at those. I mean, I was looking at curves, and I'm just pulling it up right now to make sure I have this right. But that you also have a fraction of the wells. So, I mean, I think there's a lot of one. You had production shut in you had everything shut in 2020, brought back online, and then you have the new stuff. Is what I mean. 600 some wells, I think at least are showing through in Varus or Prism. That's what's in the sort of the system that I'm looking at. Is that about accurate for how many wells you're showing for 2021?
2021, yeah, I think we're closer to that 700 some. Yeah. Yep.
Yeah, I mean, I'm looking at that gas is up. I mean, basically, if I'm normalizing for 10,000 foot laterals, which is basically what the Bakken is everything's 10,000 feet. That is we haven't seen incrementally longer laterals, which is we've seen it in every place. So there's something to be said about these acreage positions as well. And I do also want to get into spacing, and sort of why we haven't heard about the privates and Krakens and stuff like that. But when I'm looking at the curves just normalized, and I know they're not perfect, and I know, you can only take so much from these decline curves that you're pulling, and I know that's not perfect, but they're kind of mushed, right? They're kind of stacked on top of each other the last several years of production, which is not a bad thing. I mean, right, costs are being lowered, production's being held up, cums actually look good. If my cumulative production profile looks good, or one is even in line with the year prior but is above it, and actually year over year we're seeing that it looks like 2021 is roughly in line, but the gas side is up. And actually, that's what I'm saying. If across every play, the gas side is up, and you do see that. So that oil, I'm looking at the decline curve right now, and the oil, they stacked on top of each other year over year, and they come down. But the gas curve actually,
Gas is
and
flat,
then
right?
it's exactly it
Yep.
moves up, and so you have a lot of gas. And how much ethane are you rejecting? I mean, how much of this gas are you actually really being able to utilize? And I mean, this is really important because we have a crap ton of gas, and I think this is especially important when we talk about context that can't, North Dakota is not far from Canada. I mean, this is when we talk about lots of Canadian gas production and why we need LNG exports, and obviously in the context of what's going on now. But even if we didn't have this crisis, in Ukraine before that, we have a need for global natural gas, and it's just really important to know like where it is and where it can move. And whenever I think of the Bakken, I do think tons of natural gas. Whether you can get this to Canada or whether you can get to the coast, it still needs to get there and be exported. So, but right now, where's that gas going, and how
Yeah.
much is
So
being
right.
used?
Yeah. So we're, we just look at base. We're flaring numbers end of the year. We're about 6%, so which is above state targets, which is encouraging on that front. Our gas, obviously North Dakota, not high population. We're a huge net exporter of the gas that is being produced. So we're extremely reliant on the Northern Border Pipeline. Less so, but still reliant on the Alliance Pipeline going down to the Mid-Con. Again, where it's competing in that Chicago market, competing with Marcellus gas. If there's any Gulf gas, trying to compete in that same market.
But
But
these are
again, I
why
mean,
that's a wide grade pipeline. I mean, you're rejecting a decent amount of ethane, right? Before you,
uh, the rejecting ethane into Northern Border. So there's our gas that's coming into the residue streams is on a typical basis fairly hot, right? We're in most cases, if you look at the exit tailgate for many of the plants in North Dakota, you're looking at 1175 BTU, almost 1200 BTU in some scenarios. So they're looking for a home to get that ethane and tuck it in, because again, we do not have a local market for it. We are seeing some of the gas plants capturing a piece of that ethane, moving it down in that Y-grade stream to Bushton, Kansas on the One Oak system. That has been kind of a dynamic that shifted in 2021. What is the long-term outlook for that? That the market's going to decide that. But regardless, physical space, BTU considerations, all things are pointing to certainly challenges to continue to meet our gas transmission needs for the residue stream as well as those Y-grade and the NGL stream. We're in need in the next 2 to 4 years of some significant expansion projects coming to light.
and how do I mean, I know you can't speak directly to what your conversations are with specific, I mean, I'm not asking you to of specific midstream players, but that is important. When I'm talking to clients and I'm talking to folks, and in the context of the multitude of issues that we've just touched the surface on for the Bakken, because it's, there's a lot of good, I want to say, but it is complex in the Williston Basin. And so from a midstream perspective, it is complicated, right? And this has been something we've talked about for years. I've known Justin for almost a decade now, and I cut my teeth on the Bakken and the Williston Basin, and gas and midstream, and building out gas infrastructure has always been a huge component of getting this play up and going and getting it running. So now, to keep it going, I mean, you still have to maintain that midstream investment in infrastructure, but you can't. You're struggling on the maintenance of the upstream, right? Of actually the drilling activity. And I know that you don't need both necessarily, but the problem is that there's there's a hurdle. And we see this with private investment, with private equity, it's the talk about the Williston Basin is, there's just not enough inventory left. The spacing, it's all depleted, and we can't put those wells, it's already too tight, and there's just nowhere to put the well. I mean, the first thing I always hear from, private equity guys is, there's no wells left to drill, and so why would I invest up there? And then you have midstream folks that are up there that are trying to sort of navigate this, and my gut reaction is that's always ridiculous. Where you find oil, you find more oil. So I'm not concerned about getting more oil out of the Bakken. I am concerned about the perceptions, which is why I like to work with folks and play in the space and help them really understand what's available. I think there is a lot of opportunity in the Bakken, but it's how, getting these midstream guys to really, figure all this out. So what are those conversations like? And is that a problem right now of getting, matching up the midstream and upstream, but also just the midstream that's there, of making sure it's you're getting the investment that you need, and is there struggling of understanding what's sort of happening, or just a struggling of interest? Where does that stand?
Yeah, so certainly a struggling of understanding, right? You need not only the players up here on the midstream side, but then you need the financial sector to buy in, right? These are decades long projects that companies are working on, and it becomes extremely challenging when the messaging is out there. Like you just said, that the Bakken, they may have seen some report that said the Bakken's only got 10 more years of inventory than it's done, right? And how do you finance and put together the next gas plant, the next transmission project? How do you put that on your books from commitments on these pipeline systems? And so these are real issues. And so again, that's one of my goals, is to get this message out there that, look, you need to think about the Bakken differently. We have incredible midstream needs that are going to continue to we're going to need billions of additional dollars of investment here in the next 5 years, 10 years. And that's with what we know today, let alone what we know 5 years from now. And so to close that gap and to bring that knowledge level up for all players is absolutely critical. I've got an example where, I won't name names, but again, a financial company reaching out saying, why would this company even be doing this? They don't, and it's like, no, you have to think about it differently. This is why they may be doing this, because there's tremendous amount of opportunity in that part of the state, or whatever else is going on. That, again, that knowledge, and that we need to bring the intellect up on these conversations several notches, I think.
I absolutely agree with that. And that I've been honest with you, and well, I'd say I'm relatively critical of, I think the state needs to do more of getting that message out, and you alone aren't going to be able to. And it's great what you do. And if you guys aren't aware of the North Dakota Pipeline Authority's website and the data Justin produces, I mean, it's very transparent. It's fantastic. I mean, we have a lot of transparency on the Williston Basin because of Justin, and it's really good. But I spend my day to day in life with, talking with investors and talking with private equity and talking with, and studying the public side and looking at individual assets, and it's hard. And so I truthfully believe that the state needs to do a better job of actually bringing in high level, you have to have an investment conference. I mean, you need to have banks and stuff coming up there and talking about this on the ways that you would have seen it sort of in 2014. And you're going to have to reattract that interest and investment, because you have all this, pressure on the ESG side, and massive amounts of misinformation, and the mismatch between the upstream and the midstream, right? That we've just been talking about, of not fully understanding that. I mean, I remember at this amazing SPE workshop, which I've referenced multiple times in different podcasts, but there was an SPE workshop on the Bakken, which you were at in 2014 here in Denver. And it was one of the first really good, really good workshops where people were just very candid and transparent. And there was something happening in the Bakken, which was there was a ton of refracts going on. And I always tell people, refracts, if you're going to actually have a play that's going to refract, you're going to do in your oldest, most well-known play, and you're going to do it where you had oil and you had good wells. And the Bakken is probably like absolutely, I think, prime for it. So if you think that your short little horizontal laterals with crappy, simple frac jobs from EOG, which were monster wells in the partial field, in 2008, if you think that those can't give you a little more oil, I think you're absolutely full. I mean, you're absolutely full of it, because we know that this play gave a ton of oil with very limited, with very limited stimulation and completion designs. And I still think it's lagged even over the years as Hess and Continental have sort of, ramped up and tweaked their completion designs. It's still, when companies were really ramping up on more sophisticated designs and more, 100 mesh and higher fluid loading stuff, the Bakken just wasn't getting the same attention. I don't know if it had the same completion engineers, but it just wasn't. You didn't see these big completion jobs. And I still think the Bakken is kind of lagged there. If you wanted to really, could you tweak it a little bit? When you don't have a lot of love and a lot of attention and focus, it sort of misses that. And it's just like when you've been competing, the Bakken's been competing with the Permian since it sort of, came off the map in 2014, and the rig count flipped and everything, and all the love sort of went to the Permian. And I think that if you're looking for, finding more oil and tweaking it, I mean, the Bakken has it. It just is, it's a matter of understanding it. And, are you going to lay laterals in between each other? Maybe not now. I mean, at these prices, you probably could. But it's really about who has the acreage. Can folks actually get in? And I think the entry point, feel free to comment on all that. I'd love your thoughts on if you disagree with what I just said. But is part of it that people, new entrants can't make it? That, something you always hear is the acreage is taken up. Everybody has everything. So how do folks actually invest? Because if the acreage is already taken up by the folks that are there and they're not drilling, what can anyone do?
Right. Yeah, and that's a true statement. I mean, we know. Again, I hate to say we know where the extents of the Bakken are, because I'll be proved wrong 10 years from now of how that continues to play out. But yeah, largely, again, the Bakken acreage, 80% of our production is from those publicly traded, and where they're going to allocate their funds. The Bakken's always competing for that. We'd like to think that we've solved a big piece of that puzzle on the crude oil side. We're seeing in very, very strong netbacks in the Bakken on the crude oil side. It's just this gas side and this longevity discussion right now that are front and center of kind of our principal issues of getting information out there.
Do you think there's an opportunity for publics to, to carve off stuff to some privates? Because, I mean, we saw a few years ago when Kraken was sort of going to town, and, in 2018, there was quite a bit of love for private equity in the Bakken. And I would say that, I've heard of plenty of companies trying to get assets in the Bakken for years and just haven't been able to, because it's sort of all taken up. So I think there are folks, that private guys, which would love to get in and simply can't get it. And there's sort of a disconnect where the publics aren't really talking about it, but they're not also willing to carve off their positions. And then you have massive, differences between a bid-ask spread, which have been just completely out of the realm of anything normal in the past couple of years, especially during COVID. Folks thought the bid-ask spread would, that would come down and narrow, and it didn't quite, especially in the Bakken. It seemed that, what if a public company was willing to carve something off, they were probably wanting to sell it for way more than, private companies thought it was worth. And so they didn't do it. And then now you have the problem of the sort of the value of production and what it's being valued at versus the value of acreage. And I think EOG actually was talking about that as well in that January talk, where they were saying, that they can't go buying production because it's being valued too high. They have to, if they were going to do something, they have to get acreage because they have to assess it that way. So it's this whole, PDP. And I think the Bakken gets stuck in that a little bit, is that, there isn't dry powder that you can just get. But at the same time, these publics are, they're not selling it off either. And that says something about the Bakken. If you're not selling it off, one, prices are really high. So, and the fact that Continental is running 8 rigs, and Hess is saying, well, we may go to 4. I mean, yes, we're only at 30 something. We're only at 30 rigs in the Bakken, but that's still, I mean, and it should be, I mean, really at these price levels, that it should be, we should easily be 50, if not well above, for rigs. But if you're saying 8 and 4, and these are public companies, and Marathon 3, and they might eke out another, I mean, they just don't have an incentive to drill it up all at once, right? They have other plays that they're going after, and they hold the acreage. And it's something, since 2014, most of these operators have held their acreage by production. They just don't have the need to go drill baby drill in the Bakken.
Yeah, and again, that other piece of the discussion, right, in the gas capture. If
Yes.
I don't know that there's a whole lot of another gear that we can push into, right, and still stay within some of those constraints and considerations until we can continue to build out that midstream sector and get some solutions at all fronts, right? Gathering, processing, transmission, liquids transmission, all those need to come together before we can meaningfully start ramping up production, if the companies had that desire to do so. Your question and discussion on, companies and acquisition, that's certainly outside of my wheelhouse. I don't know that I've got a whole lot to add to that conversation, but I do know what type of real constraints we're seeing on the ground here, and how that plays into, again, maybe why we're seeing some companies do what they're doing today, right?
But that gas capture piece, I mean, it is actually relevant, and I do think it's a wheelhouse you should play in a little bit more, because I mean, we're sort of giving people a high level overview, and hopefully they have an understanding a little bit of the Williston Basin. But I mean, weather is a huge issue, obviously, in North Dakota. So, one of the things that when companies held their acreage by production, and they weren't running and gunning, I mean, EOG was one of the first companies to really slow down aggressively during the winter months, and then make it extremely seasonal when they were active. And so obviously you have ramp ups in the summer because the weather's great, and then very, very treacherous, -40 days. So winter is hard, and as you said, you had a tough winter, so production comes down, activity comes down. It's just harder to do things. But if you're thinking about from an investment standpoint, I mean, knowledge is everything, right? People have to understand what's going on, and so when you talk about just the gas capture and gas being, what is the BTU content? How much of it, what do you have to do to actually process it in field? Where, how much liquids do we have? What are the opportunities? What can we do with it? I know you guys have, some folks are doing, Bitcoin mining and things like that, but I mean, when you have a lot of gas, there's an opportunity, but there's also, when people don't understand it, and if you don't have the activity from the operators and the rigs ramping up, the first thing people do is a cursory glance of, okay, what's going on and what's the activity? And then it's, okay, well, yes, they have gas and they've got issues, but why would I invest in that? Or, if I'm a midstream company and I'm looking for opportunities, one, if I am in North Dakota or in the Williston Basin, or two, if I'm looking to enter, does the upstream match up? And I think that's where there's sort of it's a simple disconnect, right? It's that I don't see the activity. I've got all this production and everything, but it's how are you sort of matching up? And I do think, as you're explaining this stuff to folks, it is important for investors to realize that, they are kind of, they're not two separate issues, they're connected. But the gas piece is still something investable, and it's still something, if the gas is there, regardless of the production, or regardless of the activity from upstream operators, is that it still can be processed and used, and something has to be done with it. And I think the information around that is pretty critical in terms of the processing of it, and what can be done, and what are the opportunities for it. Even if it's, if it's taking it north and it's getting it to LNG, or taking it south, or whatever it is. And we have limited infrastructure in the U.S. to begin with on the gas side, but it's just one of those things that the discussion has to be elevated so that people understand that there's a lot there, and more infrastructure has to be built out in order to capture it.
Yeah, absolutely. And gas, it's been that piece that's we've always gotten wrong, right? We've always underestimated what it is from a volume perspective, what the challenges are going to be, the timing and of all of our projects. So these next 2 to 4 years are going to be absolutely critical for the next, setting the Bakken up for the next 5 to 10 years, right? The investments that we see come forward to allow producers to get more active, to be more active, but then still hit those targets that they want, right? Again, designing and building a system for 91% capture, which is much, much different than designing and building a system for 99% capture, right? And so again, this whole discussion has just completely evolved in the last year of what this is going to look like. And I don't see a scenario where we see much wavering from those internal targets. At least I don't have a hint of it yet. I don't know what 50 and if prices went up another $25, another $50, if some of those considerations get pulled back a little bit to bring some more supply to the market, we'll see. But right now, it's absolutely firm, and we're seeing it in the numbers and how operators are making their decisions of even day-to-day production in the basin here.
So just a couple questions before we close, and I want to wrap it up. I know we have about 5 minutes here, but is that, when you think about it like that, do you think that one is the massive ESG pressure that I talk about a lot in podcasts, and I work a lot and talk about it with clients, that massive ESG pressure that we've seen, that significant ramp up in the course of 2021, with the U.S. jumping back into the Paris Climate Accords and all the companies pandering and jumping in and doing their net zero and going, and ConocoPhillips, everybody's jumped onto these Paris Climate Accords as well, which for oil company I think is ludicrous, but regardless, they're doing it. Is there a correlation in terms of, from the gas capture side, that big ramp up that basically happened over the course of 21, that the public companies that's part of it, is that if they hadn't further committed to additional gas capture, that you would see activity probably a little bit higher right now?
I think you'd have that window of opportunity, okay, probably to bring some more in. Yep.
So that's one. And so it's not saying that gas capture isn't important, but from an activity level standpoint, the ability, I think the flexibility in order to be able to flare, that's something. And then I think we do have to separate one thing, and that's that if you're bullish on inventory, right? If you're bullish on inventory and you're saying, okay, well, at these price levels, we have more inventory, et cetera. Forget the price levels. If we're just bullish on inventory, or bullish on productivity in the Bakken, but does that mean that more is available, that there is, the private operators that have carved stuff off, that, is it all taken up? Is all purchases all bought up? Or is it, and just, it's the folks that, it's the Continentals and the Hesses and the Whitings, so they have it all. So, when the inventory grows or, expands, they have it. So is there opportunity for new entrants in the basin? Or is this simply the game of, it's the acreage that's going to, we get more inventory, it's within the existing acreage, so that there isn't more opportunity?
Yeah, with what we know today on inventory, and I'll just speak to North Dakota to start, and then I'll kind of touch a bit on your other question there. The acreage is tied up. They're held by production. You've got, basically every unit has at least one well active on it. I think it'll be real curious to see how Eastern Montana continues to evolve here in the next couple of years. We're seeing real good success on what we would have historically called the fringe areas of North Dakota. Montana, we keep seeing one or two rigs pop on and off over there. Are they going to take what they've learned in North Dakota, push it to that portion of the play, which has had historically some great wells as well? That's where the Bakken, really got started in the Williston Basin, was on that Montana side.
Right, yeah. Billings Nose and that Montana side was where... Is Billings
Elm Coulee there?
Yeah, Elm Coulee. Sorry, Elm Coulee. Yes, yeah. On the Montana side, and really where it kick-started, and then everybody flipped over to the Bakken pretty quick because you guys changed your tech structure.
And it doesn't change. It doesn't. We share the same infrastructure, right? Our pipeline systems, everything. We don't necessarily recognize the state lines when we talk about some of these big picture, issues. So, what happens there is going to be meaningful, and I think that it'll be interesting. The next 5 years. Eastern Montana with some new technology, lower drilling costs. That'll be a fun portion of the play. It's still North Dakota's still going to drive the boat. We're still going to be the by and large the biggest producer in the Bakken. But when you talk about kind of new areas that might be kind of on the cusp of change, I'd keep an eye over there.
I think that's an exciting comment and a really good point. So I would even say that, and I'm not sure where it stands from an acreage standpoint, but I would hope that even maybe in South Dakota, and I say this, and I know all this stuff sounds ridiculous, and if you know the Bakken, you'd say, ugh, South Dakota, and things like that, of like, it'd be hard to conceive. At $95 oil, folks, it's all up for grabs, everything. And I really encourage folks, to give me a call or to pull up maps or whatever, because when when I'm ripping through these assets and I go through every single play in the U.S., gas and oil plays, and you're looking at public privates and looking at where they're at for rigs, ducts, permits, you name it. The maps are just dramatic. Like we have activity where we haven't had activity ever, and then so it makes sense to me that and hopefully there is some acreage available in on the Montana side, or at least can transact because it's not all held by publics. But if there's some acreage available on other sides at these price levels, and yes, I don't think these price levels can hold up forever. I think we're looking at pending, very serious inflation. Further geopolitical risk can hold up prices, but the levels we're seeing from I think risk standpoint for recession are extremely high. So things will probably have to slow down at some point, probably in not too distant future. But that all being said, when prices are in the 90s and even in the 80s, things start looking much more attractive. And I would imagine that places like Montana and South Dakota and fringier areas really start looking promising. And there have to be folks that are dabbling and playing and looking to grab acreage where they can. Awesome. Well, Justin, it was an absolute pleasure. I want to, say that our my thoughts and prayers, as I'm sure yours are as well, are with the folks in Ukraine, and definitely don't mean to make light of that situation by any means, especially in the context of energy. And what's happening is a extremely evolving story, and it unfolds, literally nightly. There's more information, and it does have a very big impact on energy markets. But I think this was a timely discussion with the Williston Basin, and really appreciate you coming on the podcast, Justin.
Yeah, thanks for having me. I enjoyed it.
Absolutely. Okay, talk to you soon. Bye.
Yep, bye.